Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another trading day, retail trading team. I'm Mastro, and this is your routine briefing. Gonna pop my camera up a little bit here. Seems my cat was playing with the wire, so we'll want to center that a little bit. Get my nice little sculpture, as they say, in the background there. And here we are. So, welcome to another lovely trading day, Groundhog Day. Once again, we're going to see where the opportunities lie. There are always opportunities in this lovely market, and we're gonna find them today, by golly. And so let's jump right into things. We're gonna start in that warm-up document and go from there. Okay, so let me pull the warm-up document over here. A Groundhog Day in the warm-up document as well as the tape action itself. So let me minimize my screen here a little bit so you can see what's going on. Let me get the cat out of here so she doesn't hit the camera again. Say hi to Kitty. This is Monkey. Hi, everybody. Okay. Kitty, you go there. And do not hit my camera wire. Thank you very much. Okay, so looking at this warm-up document, we have the exact same setup as we've had for 3 days in a row now. And that setup is auction overnight is down and balanced. The open itself is an open auction, indecisive, and we are left trying to figure out what price is going to do. Obviously not trying to predict, just trying to react. Right now, the bulls are winning that argument in that battle, and we'll see if for the third day in a row, that is how things resolve here. Not one, but a couple notable things. If you look at that expected move today, we are currently consolidating near the edge of it, so we did get quite overextended in the overnight session. You had that nice little Globex trend for those of you who like to trade from, I don't know, was it 2 a.m. until about 5 a.m. when the tape is actually decent. And yeah, so we got overextended. Right now, that outlier level is actually right about at that 443 gap fill. So we'll continue looking for that. That's been what I've been looking for quite a bit now. But we haven't seen the fill of that gap, and we still are not having any follow through there. And as I look at the market here, we're still just kind of again having that opening chop, that open auction without any decisive moves as of yet. So one more thing I want to draw your attention to in this warm-up document is the levels in SPY. Those SPY levels, there's now about 6 of them, so we are getting nice tight in those levels. I think things are going to be pretty clear, and I think we will have some sort of trend resolution sooner rather than later in the lovely SPOOs here. So that's what I got going on in the warm-up document. This is available in the description of this video, along with all my other mechanics and fun little resources in the description of this video. So we'll see what happens, and let's see what the tape action is showing us, maybe some levels where we can engage and what to potentially look for today. So let's start in the weekly. Again, as I've been saying ad nauseum, just kind of keeping our perspective here. We are still in a state of imbalance relative to that overall volume profile. 436 is the top of that volume profile, and so any downside magnet is, of course, that 443 level that I've been talking about all. I want to say all summer, but pretty much not quite all summer, but a good several weeks here. If we do get below that, though, that's that 436 level. Watch for that test of the top of value there, as well as a test of this trend line that comes from the highs, overall market highs from last year. So keeping things in perspective, definitely still in a bull market, at least a bigger picture bull market, and still watching what happens if value continues to move up or if we do get that continued correction down to that 436 area. So that's what we got going on the weekly. Hopping over to the daily, there you can see there that 436, or excuse me, that 443 level right below the swing low from Friday. Still waiting for that fill. 50 SMA is right near the swing low from Friday as well, and as is that 4 standard deviation of VWAP. I didn't say this yesterday. I'm not sure if I said the day before either. Yet we do have. I like to remind you that anytime that you get this significant extension beyond that 4 standard deviation of VWAP, you do often see these corrective moves, and they do usually have some follow through relative to the overextension. So if it's a bigger overextension, bigger follow through, smaller, less big. I think that's a bit of a word soup, word salad there. Yeah, in any case, watching what happens at that 443 level for that push back through into this kind of mess of trend lines there. And again, I think if you do see that sell, it's that 436 area that's targeting. We've got to clean up these trend lines. So really what's going on here as I watch for potential entry as we are getting a tentative sell here, what you got to watch for on these trend lines is right now I see this is kind of like that bull flag that seems to be developing. Again, as soon as that breaks, we'll get rid of some of that. And this just comes from that overall high. So yeah, I know there's a lot of lines on the chart. I like to keep it pretty clean, but there's a reason that we're chopping around like this. There's a lot going on in this area. So just kind of keeping those levels in perspective. 443, 443 fails, 436. So keeping it simple there and watching what happens relative to those levels. So nothing really to talk about in volume area and nothing really to talk about until we either make a higher high from yesterday, or again, go to that 443 level. So if we want to hop into today's tradable levels, in terms of price action, etc., let me just go to my execution chart and see what entries popping up here. Okay, so in 1 minute, we put in this candle, make a lower low. We are going to get involved. So I'm going to get involved. Obviously, you don't have to. We don't do trading advice on the puppet show here. So yeah, just want to reiterate one more time. Although I will take this trade myself, it is lower probability, potentially, given that we do have the bottom of the expected move at about 44.85-ish on the ES here. So definitely fading the probabilities there. You have about 70% chance of closing beyond that. So I will take it. I will take it as a mechanical trade, yet it is not an A+ setup. The A+ setup remains a buy of that 443 area. Yeah, I haven't had a trade in 2 days. So you know what? I'm going to take this. I'm going to do it about half size. And not about half size. I'm going to do it precisely half size. And we're going to see what happens. So just let me get this set up, and then we'll go back to the puppet show. All right, there we go. We're in. Do 93.25. $147.50. So we're definitely looking for that significant extension on this trade down to that area. So again, that's why it's half size. Kind of looking for the outlier level. Remember, the outlier level today is at right near where this take profit is, so that's why it's half size. I'll take the signal, yet definitely highly possible, and I would say in fact probable that we do close a little higher than this. But let's talk about that. So I'll go. Wasn't gonna show the TPO first yet, since we're already involved in this chart. Let's talk about this chart first. And I like to look at it in terms of the structure. This is just my execution chart. So let's look at it in terms of structure. This morning, that morning low, the overnight low, was just another perfect retest of this cyan trend line. This trend line comes from the overall low in March. So if I just want to zoom out here and show you what I mean by that, go like that, and you can see comes right from this low that we put in March just a very standard trend line, and we did bounce off it precisely on Friday, and again this morning. So this is really the most important, what do you want to call that? Most important, can't think of words. We'll say, let's call it a level, even though it's going to be a dynamic level. Most important marker. I don't know, Bueller. Anyways, yeah, so cyan trend line is going to be really important going forward, considering we bounced off it Friday, we bounced off it this morning, and so we'll see if we bounce off it again. That is the main little line there. If you just want to draw it yourself, comes from that March low. I marked it cyan. You can mark it whatever color you want. And that is what I am trading around. You see we have a potential, I colored this dark blue just because I'm not sure that it's really going to mean much. It's just kind of been that line of best fit from the lows that we've been putting in starting last week. So we'll see if that continues to hold. But really that first major level is going to be 44.60. What does that correspond to? Right about 443. So undercut of Friday's low. Watch what happens at 443. And then again, what happens right at about right below 443. So if we start to sell through it, again, highly improbable today. In fact, there's only a 0.03% chance that we close much below that level. But if we do, that is going to be a significant breakdown. And what usually happens when you do close beyond these outlier levels is you see that extension of the sell. So you see a pretty significant move beyond that expected move. And if that does happen today, that's going to be if we reject that 443 area. So if you go to that warm-up document that I showed you earlier, that would be setup 3 would be the most tradable play if you want to play that breakdown trade. Yet again, I have to keep saying it, low probability given the expected move, given how much work the bears have already put in the overnight session. So those are really my major structural levels. Let me take the trade mode off this chart for now, just so we don't get confused. So we have the trend line here. That's the first major level, second major level, 443. Below 443, we're looking for that, or I'm looking for that potential breakdown. Outlier level be damned, but outlier level definitely still worth considering is going to be 44.50. So lots going on relative to that zone. Yet once we get through that zone, that is going to be, I believe it's a gap in crap or something, colloquially known when you do fill those gaps. If we do lose it, watch for that extension downward, potentially stopping at 44.25. Yeah, I really think, again, that 436 area on the SPY becomes the magnet once we lose 443. So we'll see what happens there. I'm going to pop trade mode back on, and we're going to look at a couple more charts. Where is chart trade mode? Okay, there we go. So hide this for now, and you check out this TPO. So we've been getting a lot of these island-looking value areas. You got another one last night, protected by that poor high. So that is a good area to trade around. I think that's going to be notable supply going forward. Really, the first major level of supply today, really, I don't see it so much as supply as just a resistance level, is going to be that single right below 4,500. So if we do get that bounce, and again, probabilities do favor a close above this 85 level. If the expected move works today, if it's one of the 70% of the time that we do close within the expected move, watch what happens around that 95 area. Yet going forward for the rest of the week, I know we have, I think Jerome's releasing some of his journal diary entries tomorrow at about 2, but going forward, watch what happens in this 45.10 to 45.18 zone. We do have a nice little potential supply zone there. So that is really what I'm watching on the TPO. Again, you can see 44.56. That is almost a perfect gap fill on 443 SPY. So if I had to pick a ping pong zone today, it's going to be somewhere between, let's say, 4,500 to 4,510 and that 44.56 level. So we'll see what happens there. Because, and another reason that I'm just not too enthusiastic about this breakdown trade and why I'm not necessarily expecting us to break down is, again, what's going on in volatility. Volatility continues to be fairly divergent relative to the market, not making higher highs as we make lower lows and just kind of consolidating around the underside of that triangle. So what's notable, and we'll say lends to the bear case, is we did have a false breakdown of the underside of that triangle yesterday. We popped below it. This 1680 area is my pivot, popped back above. Now we're back inside the triangle, which usually tends to result in a retest of the other side and sometimes a breakthrough. So I'm just going to be watching this structure today. and seeing if the Bears want to give us a nice little breakdown. But again, said it several times in this briefing. I just want to say it once again. We have a 99.7% chance of closing above 44.50 and a 70% chance of closing above 44.85. So definitely no layups today, and that's again why I'm partial size on the trade that you just saw me take. So we shall see what happens. I'm excited to have my first trade of the week and my first trade since Thursday. So I hope that you all get trades too. And if you want to fade me, that's again a high probability proposition, just looking at the expected move. So we'll see. Maybe we can both win. That'd be nice, huh? If we get that nice peak below 44.50, maybe get a reclaim and get that 443 gap fill trade, and then hey, if we want to squeeze higher from there, again we can both win and all have a great time. So speaking of having a great time, if you had a great time today, I'd appreciate a like on this video. That helps that YouTube algorithm and our quest to get back to double-digit views. So I appreciate that. A little thumbs up. And besides that, I'd also appreciate any engagement, be it by responding to this newsletter in the comment section or on Twitter. You can find me at Routine Trader. And regardless of whether you engage or whether you give us a like, us being me, I don't think I have multiple personalities, but who knows? We'll see if the market keeps stopping around, if that develops. But yeah, I hope you had a good time, and I hope you continue to have a good time trading today. And I thank you for your attention, and stay classy until tomorrow.